And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends, traders, and other YouTube enthusiasts, I guess. Happy Friday, everyone. Welcome to the market forecast for August 19th, 2022. I am JD, filling in for Mr. Hoagland, who is taking a long weekend. As always, thank you for choosing to spend your time with us. Hopefully, we can all walk away from this with a little more knowledge and understanding than we had before we started. Don't be afraid to hit that lucky like button. Feel free to share your comments, questions, and feedback in the chat. And don't forget to subscribe to our YouTube channel so you get all of those wonderful updates every time we go live. Now, full disclosure, I'm not that big on trading on Fridays. I'd call myself more of an active observer on Fridays. Nevertheless, I'm going to show you what I'm looking at in the markets I track today. All right, so with that, in the spirit of Hoag, we'll start with this. Today is National Potato Day. There you go. Personally, I love a good potato, and when I read that, I was instantly hungry. So I'm going to fry up some hash browns with my eggs right after this. Coincidentally, after 30 years of airing, CNN has pulled the plug on its Sunday morning broadcast of reliable sources. I say coincidentally because a lot of people who are not fans of that show like to troll the show's host. They troll the show's host, Brian Stelter, by saying he looks like a Mr. Potato Head doll. That's funny stuff. In other news, according to the Wall Street Journal, St. Louis Fed Governor James Bullard isn't quite ready to say the inflation surge has peaked and hinted at another 75 basis point rate hike coming in September. So we have that to look forward to. On the economic calendar front, as far as the calendar goes, all we have on the docket today is the weekly Baker Hughes rig count out later this afternoon. And we won't be doing a recap today, so we could check back in on that on Monday. So let's just take a look at what happened overnight. Let me click over something real quick. Okay, overnight, stocks in Asia closed mostly lower, with the Shanghai Composite down 0.59%, the Nikkei down 0.04%, and the Hang Seng Index upticked just a little bit to up 0.05%, pardon me. In Europe, stocks are also trading mostly lower this morning, with the FTSE. The FTSE is up 0.21%, the DAX is down 0.68%, and the CAC is down 0.43%. Rounding out that trifecta, U.S. stocks are poised to open regular trading hours also lower this morning. The VIX is currently up 3.92% to 20.68, and the yield on the 10-year note has climbed to 2.965%. All right, let's see who we've got in the room this morning. Orion Staffa, good morning. First in the room, Dario, Brian, Shaw Cunningham. Where are the fish today? We'll take a look at that in just a second, Shaw. Tachyon, good morning. Sunil, Dark Kevin, Ron, Charles, D.A., Alfred, Serenity Trader, Kevin Guy, Zoraine, Bill Phillips, Marcelo, Mango Heist, The Rooster, Sarah Hall, Pete, Vince, Jerry is awake, Anise, Daryl, France Ho, Stephen C. Good morning, everybody. Thanks for being here. All right. So like I said, I'm not a huge fan of trading on Fridays, but I'm going to share some charts with you in just a second, and I'll show you what I'm kind of looking at today. Likely won't act on anything, but this will be what sets me up for Monday. So let's just dive in here. All right, let's start with the daily on the S&P 500. So yesterday was a pretty back and forth, inside range bound kind of day. All day the ES traded in a right here, this little guy, this little candle traded in a 37 handle range. Breaking it down, there was a 35 handle range during the overnight Globex session and a 32 handle range during regular trading hours, with a minor extension to the upside right around the close. Settled at 42.86.5, up just about 10 points on the day. Volume took a bit of a hit, just a little tick lower, 1.36 million contracts traded, and the September contract gained nearly 10,000 in open interest on that little close higher. So we see our weekly kickoff high here holding as kind of the line in the sand for the moment, possibly protecting some stops above these highs from late May back here. Prices continue to hold steady above this 10-day moving average for now. So in the longer term, momentum is still signaling higher prices for the moment. We've got this little bull flag setting up here. I know Hogue mentioned that yesterday. We're trading right on the lows of the overnight session right now, so targeting this 10-day moving average could set up a sort of a low-risk opportunity to get long. Which also reminds me, I made a note about this. If you are in a swing account, check your email. We sent out a notice yesterday. You're allowed to hold your trades over the weekend in your swing accounts. Once again, they lifted the restriction on that just the other day. Let's click over to the 4-hour chart. So here we see what looks, like more like consolidation or balance this week. Pardon me. Volume's been relatively flat. You can see prices just sort of jockeying around the shorter-term moving average, kind of just looking for direction. These two trend lines here that I drew, they extend back to this low from mid-July down here. Just kind of something I'm looking at. This is sort of a take on Elliott wave, but the gist is, the flatter these trend lines get, the weaker the rally gets. So far, we've only plotted these two lines, or I've only plotted these two lines, but we're breaking through this lower line right now. So we'll likely plot a third line sometime next week, even if it just continues to move sideways. This is just something I'm keeping an eye on, but I'll keep you posted on that too, or I'll inform Hogue about what I'm looking at if he's not watching, and maybe he can throw an update in for you. Over to our 30-minute. So here we see yesterday was just textbook inside day. Prices during yesterday's regular trading hours never extended either above or below the range from Wednesday's regular trading hours. The majority of the session traded inside the overnight Globex low from Wednesday into range from Wednesday into Thursday until really this new high was printed in the last hour of trading. It was choppy, that much is for sure. Overnight inventory right now is short. You see we took out this low from as we took out the low from Wednesday just a little while ago. Last Friday's value area low back around this 42.35 level looks like a nice visual target where we might see some buyers step in. That's a level I will be paying attention to early on. Technically, we're still trading inside this weekly range, so a breakout trade could be on the table, but it's also Friday, and we all know that the market likes to sort of rally on Friday. They call it the late Friday rip, so the probability of a false breakout on this to the downside here is increased a little bit, but that's something I'll be paying attention to also. I'll also be looking at those MOC numbers. The nice MOC numbers gives a good indication of what to expect going into the close usually. Overall, I think the ES has been relatively flat this week. If trading ranges and breakouts is your thing, you might get some opportunities today. If this gap lower we're going to open with a gap. We'll likely open with a gap lower. If that doesn't fill early on after the bell, my first downside target will be that 42.35 level that I just mentioned. Dan Emmons, I'm reading your comments right now. Everyone was short. Got screwed even in the overnight session. Yeah, even the worst days of 2022 have seen rip and rallies. Yeah, and they sneak up on you right at the end of the day too. Let's move over to crude oil chart. So here is our daily of the October contract for crude oil. Now that the roll is over, we see a nice little spike in volume here during yesterday's rally. It looks like just about 171,000 contracts traded. Closed about $2.40 higher. But the October contract did lose 14.7 thousand in open interest during this rally yesterday. After testing weekly kickoff low early on this week, we started to see a little bit of acceptance above the 10-day moving average. Kind of hovering right around there right now, right around the VWAP and the 10-day moving average. At a glance, it would appear that a possible shift in momentum is underway. When you see the cross and spike with a slow stochastic oscillator down here, and the VWAP crossing above the 10-day briefly earlier this morning. There was a test of the 20-day moving average yesterday, and prices settled right in between that 10 and 20-day moving average. This downtrend is still technically in play right now, or intact, but our weekly kickoff low here has been holding strong for about a month now, and prices kind of look to be flattening out right around here. Here's a kind of a close-up on our 4-hour chart. We see a steady grind higher on increasing volume as the roll finishes up. For the last month, prices have been testing 86 to 87 level and have been met with rejection there. The old rule always said that the third test was usually always the one that broke through, but we didn't get that follow through here. It just took out some weeks, burned out a couple weak stops, and then turned right back around. I don't typically like to use another thing. I made a note about. I don't typically like to use weekly kickoff levels as a range, but it sure does look like a range, doesn't it? I would say back above this 94 to 95 level would signal another run up to the 9900 level. But we are seeing a little bit of weakness entering the open this morning. Pulling back right now, but overall, just a little weak overnight. Let's see what the 30 minutes says. I keep adjusting these profiles, but they keep resetting. I'll have to do something about that. So we have a nice sort of what looks like a kind of like a rounded bottom forming this week. We're approaching a naked point of control up here from last Friday around the 9150 level. I don't have anywhere near Hoag's expertise when it comes to the profiles, but I do know that prices have a tendency to eventually gravitate towards those naked points of control. Right now we're seeing a little weakness. We saw a little weakness overnight, coming back a little bit right now. Overnight inventory looking pretty balanced right now. We might be opening with a slight gap lower. But we'll see in the next minute. Very minor gap. We'll see if it fills immediately. If it doesn't get filled quickly right after the bell in a minute, first downside target will be the weekly kickoff low again. A fourth test of this close below weekly kickoff low will likely produce some follow through to the downside. If it does turn around, then my first target to the upside will be this naked point of control from last Friday at 9150. After taking out yesterday's highs, obviously. Over to our Nasdaq chart. So similar setup as the ES from yesterday. Inside day with a test of the 10-day moving average. Then it closed back inside Wednesday's value area. Went on to close slightly higher, just by about 30 points. 530,000 contracts traded in the September contract, lost about 1,500 in open interest. We had seeing a bit of weakness overnight, just like in the ES. You could see prices are hovering right around the 10-day moving average right now. When I see bull flags like this setting up, I see these short-term moving averages as sort of good spots to look at for low risk opportunities playing the lower end of that channel. That's just me though. I don't mind taking a low risk entry here. A lot of people like to play the breakout. If I'm imagine a small bull flag channel here. Some people will wait for the breakout to the upside here, or some people will try and catch that bottom line. I think these shorter term moving averages, if you're going to take a shot at the bottom line, your risk is tight, but your potential reward expands just a little bit. So that's also something I look at. Likely won't make a play today, but if I was going to, it would be just below this 10-day moving average here. On our 4-hour chart, you can see a little more clearly the balance or consolidation of price that's been happening for the past week. Volume has been pretty consistent, but the weekly range has been fairly tight. We did extend the range marginally overnight by taking out Wednesday's low, and there looks to be a bit of downside pressure on this one right now, heading into the open. Over to our 30-minute. Here we see, just like the ES, overnight inventory, kind of short. Little balance happening right now. Minor gap lower to open the session, possibly. Now, like Hogue says, these overnight traders are not the long-term investors. They're the smaller retailer traders, the pea shooters, he likes to call them. So a lack of follow-through or an open back inside of yesterday's value area will likely chase out some of these weaker shorts from overnight. For the moment now, we see a couple buyers stepping in right around last Friday's low at this 13,360 area. Like I said, we're just getting this little bit of consolidation right now. Overall, again, this market has been range bound this week, just like the so if trading ranges is your thing, you might get some more opportunities today. Don't forget about that big gap up from last week, though. We're not too far off from there. These charts are taking a minute. There it is. So we're not too far off from this gap from last week. But let's switch over to our gold chart. So here we are. Our little gold rally really died out, didn't it? 4 consecutive closes lower, potentially 5 going into today, after today. Trading a little bit lower right now. Closed below weekly kickoff low yesterday. More selling pressure earlier this morning. In all, the December contract traded 124,000 contracts yesterday and gained about 400 in open interest during yesterday's move lower. So it appears there is still some fuel to burn to the downside right now. See, overnight volume is actually pretty strong, I want to say. Let's take a look at the 4-hour, though. Getting a little pop right now. I left this trend line in here from last week just for reference. After this line was broken, there was a test before the move lower started. Since then, prices have spent the majority of time trading below these short-term moving averages. If you're not familiar with my charts, the green line is a 10-period moving average, blue line is a 20, red is a 50-period. 10 and 20 are exponential moving averages. The 50-period is a simple moving average. Excuse me. Moving on over to our 30-minute chart. So again, overnight inventory, trap shorts got burned out right after you open. There was some balancing out over here overnight, but did come back, close that gap really early after regular trading hours opened. Overall, gold is it was looking weak earlier this morning. Obviously now we're starting to rip a little higher. Momentum is still sort of pointing lower, though. However, these 4 consecutive lower closes, it wouldn't surprise me at all to see some short covering going into the weekend. We're tested yesterday's value point of control. We're still inside value from yesterday. So possibly if we continue to see buyers stepping in, a close back above our weekly kickoff low would sort of signal that this long-term range-bound trade that, or how do I say this? Will be close above this weekly kickoff low will signal not so much a change in momentum or a shift in momentum, but possibly some consolidation moving forward. That's what I was trying to get out. Sorry about that. But with that, we'll shift back over here. Let's take a look and see what's coming in the chat. No idea what's going to happen at the open. That's what keeps me alive. I hear you on that. Why don't I trade on Fridays? I've never had... so Fridays used to be reserved for... back in the old days when I traded a lot of bonds. So Fridays... Big days on Fridays, we had always had our auctions, and unemployment numbers came out on Friday. So Fridays were more for waiting for paper to come in the pit, and you're sort of getting that, that extra outside boost in volatility. That doesn't happen anymore. So Fridays have turned into... I started watching on Friday, tried trading on Friday, never did well trading on Friday, so then I just kind of cut it out altogether. Jack Doherty, morning, John. That's my father, Jack Doherty. Good morning, Dad. How are you? I hope you're well. Everybody else, who did I miss? Chris Johnson, what's up? Vlad, Brody, Andrew Hennessy. Everybody, good morning, good morning, good morning. Thanks for joining me. All right. Well, that is about all I've got for you. I hope you all have a great weekend. If you're in the Chicagoland area, the Air and Water Show is happening this weekend, tomorrow and Sunday. Usually an exciting time, and you might catch me out on the beach enjoying the show also. So until next time, and I don't see anything else coming in the chat right now, so I'm going to close it out. Oh, thanks, Tachyon. Everybody take your deep breath. Trade well, and we will see you next week. Have a great weekend, everyone. Thanks.